If you're 60 or older, there are 4 things happening right now in June 2026 that are not optional, not suggestions, and not the kind of information you can safely file away for later and deal with when it is more convenient. They are mandatory rules, active deadlines, and policy changes that are already in effect and that are already determining outcomes for seniors across this country, whether those seniors know about them or not. And that is the part that keeps me up at night about this particular video. Because the 4 things I am about to walk you through are not obscure. They are not buried in regulatory footnotes that only government insiders would find. They are real, they are consequential, and they are affecting the monthly income, the healthcare coverage, the banking access, and the legal standing of people 60 and older right now in June 2026. But the Social Security Administration is not calling seniors to explain them. Medicare is not sending a plain language letter that says here is what changed and here is what it means for your specific situation. The agencies involved update their systems, update their policies, update their enforcement procedures, and then they wait. They wait for you to figure it out. And the seniors who figure it out in time keep their benefits intact, keep their checks arriving on schedule, and keep their options open. The seniors who figure it out too late are the ones calling SSA in July, wondering why something changed, why something stopped, why something is different, and being told that the window to address it closed weeks ago. Today you find out in time. Stay through all 4 because each one applies to a different aspect of your financial and healthcare life. And missing any one of them because you stopped early is the exact kind of mistake this video exists to prevent. Before we get into the 4 things, subscribe right now and turn on the bell. I want to tell you something directly about why this matters in June specifically. The 4 mandatory rules I am covering today are not the last changes hitting seniors this year. There are additional policy shifts scheduled for July, for September, and heading into the 4th quarter of 2026 that build directly on what is happening this month, and that will require action from people in your age group before different deadlines. This channel covers every one of those changes as they develop in plain language, with enough lead time to actually do something about them. The seniors subscribed here stay ahead of the calendar. The ones who are not subscribed tend to find these videos after the deadline has already passed and the damage is already done. Subscribe, turn on the bell, and let's go through your 4 mandatory rules for June 2026 right now. The first thing every senior 60 and older must know this June involves identity verification, and it is mandatory in a way that has caught an enormous number of seniors completely off guard over the past several weeks. The Social Security Administration rolled out updated identity verification requirements in 2026 that affect how beneficiaries access their My Social Security accounts online, how they verify their identity when calling SSA by phone, and in some cases how they confirm their continued eligibility when SSA initiates a record review. The change that matters most right now is the online account verification upgrade. If you have a My Social Security account at ssa.gov that was created more than 3 years ago, and you have not gone through the updated identity proofing process that SSA began requiring this year, your access to that account may be restricted or suspended the next time you attempt to log in. What that means practically is that you cannot view your benefit statement, you cannot check your earnings record, you cannot update your direct deposit information, and you cannot access any of the online tools that are essential for managing your Social Security benefit from home. The updated identity proofing process requires you to verify your identity through ID.me, the third-party verification platform that SSA now uses as its primary identity gateway. You will need a government-issued photo ID, either a driver's license or a passport, a device with a camera capable of taking a clear photograph, and a personal email address or phone number where verification codes can be received. Go to ssa.gov right now and attempt to log into your My Social Security account. If you're prompted to verify your identity through ID.me, complete that process today, not next week, not when you have more time. The seniors who have delayed this step are discovering that when they need to access their account urgently, to verify a payment, to check a status, to make a change, the verification process creates a delay of days at a moment when they needed immediate access. If you're not comfortable completing the ID.me verification online, you can visit your local SSA office in person and complete the identity verification process face to face with an SSA representative. Call ahead to make an appointment at 1-800-772-1213 because walk-in wait times at SSA offices in June have been running longer than usual due to the volume of beneficiaries working through this exact issue. The second thing seniors must know this June is about a Medicare rule change that is affecting coverage decisions right now and that has a hard deadline attached to it that most people in this age group are not aware of. If you turned 65 at any point in the last 18 months and you did not enroll in Medicare Part B during your initial enrollment period because you were covered under an employer health plan or a spouse's employer health plan, the rules around when and how you transition to Medicare have changed in 2026 in ways that directly affect your premium costs and your coverage continuity. Under previous rules, seniors who delayed Part B enrollment due to employer coverage had a relatively straightforward special enrollment period of 8 months following the end of that employer coverage to enroll in Part B without penalty. Under the updated 2026 guidelines, the documentation requirements for proving that your prior coverage was creditable employer coverage have been tightened significantly, and seniors who cannot provide the specific documentation that Medicare now requires during their special enrollment period are facing late enrollment penalties that add 10% to their Part B premium permanently for every 12-month period they were eligible but not enrolled. On a base premium of $185 per month, a 2-year gap in enrollment that cannot be properly documented adds $37 per month to your premium permanently. Over a 20-year retirement, that is $8,880 in additional costs from a paperwork gap that could have been avoided. If you are in this situation, the document you need is the CMS L564, the Request for Employment Information Form, which your former employer completes to certify that you had creditable coverage during the period in question. Get that form from Medicare.gov. Take it to your former employer's HR department. Have it completed and signed, and submit it with your Part B enrollment application before your special enrollment period closes. Do not assume your employer still has the records. Ask now while the people who handled your benefits are still accessible and while your SEP window is still open. The third mandatory rule for seniors 60 and older this June involves financial accounts, and it is the one that is generating the most confusion and the most frustration among the seniors I hear from on this channel. Effective in June 2026, federal guidelines around senior financial account monitoring have been updated under expanded elder financial protection regulations, and banks and credit unions are now operating under new mandatory reporting and intervention protocols when their internal systems flag account activity belonging to customers 60 and older as potentially anomalous. What that means for you is that transactions you have been making for years, cash withdrawals of a certain size, transfers to new recipients, payments to service providers you have not paid through that account before, may now trigger an automatic review process that can delay or temporarily block those transactions without any advance notice to you. The mandatory aspect of this rule is on the bank side. They are required to flag and review, but the impact lands entirely on you when the flag fires at the wrong moment. The action step that is mandatory on your side is this. You must update your contact information at every financial institution where you hold an account before the end of June. Every phone number, every email address, every mailing address. When a bank flags a transaction and cannot reach you through the contact information on file, the transaction stays blocked indefinitely while the review pens. That hold can last days or weeks. Bills go unpaid. Payments bounce. Late fees accumulate. And the cause of all of it is an outdated phone number on a bank account profile that you have not reviewed in 3 years. Go to your bank this week, in person, and confirm that every piece of contact information on every account is current and accurate. While you are there, ask about adding a trusted contact designation to your account, a person the bank can reach out to on your behalf if they cannot reach you directly. This one visit, one afternoon, protects the flow of money through accounts you depend on every day. The fourth thing seniors must know this June is the one that carries the longest tail of consequences and the one that most financial advisors are not raising with their older clients because it falls in a gray zone between tax planning and Social Security strategy that most professionals treat as someone else's problem. In June 2026, the IRS and the SSA are conducting a joint data reconciliation sweep that cross-references Social Security benefit records with federal tax return data for beneficiaries who may have underpaid taxes on their Social Security income in recent years. Up to 85% of Social Security benefits can be taxable at the federal level, depending on your combined income, and a significant number of seniors have been filing their returns without accurately calculating what portion of their benefit is taxable, either because they did not know the rule, because their tax preparer did not ask the right questions, or because they received incorrect guidance at some point in the past. The reconciliation sweep identifies discrepancies between what beneficiaries reported and what the SSA's records show their benefit income to have been, and it generates notices that require a response within 30 days. A senior who receives one of these notices in June and does not respond within the 30-day window faces automatic assessment of the underpayment plus interest plus a potential penalty that can reach 20% of the unpaid amount. If you have not reviewed your last 2 federal tax returns to confirm that your Social Security income was reported correctly and that the taxable portion was calculated accurately, do that this week. Take your last 2 returns and your Social Security benefit statements to a qualified tax preparer and ask them specifically to review the Social Security income calculation on each return. If there is an error, filing an amended return proactively before you receive a notice from the IRS is dramatically less expensive and far less stressful than responding to a notice under a 30-day deadline. And if you receive any correspondence in June from either the IRS or the SSA that references your benefit income, your tax filings, or a discrepancy in your records, treat it as urgent and get professional guidance within the first week of receiving it. Here is exactly what you must do this June. Go to ssa.gov and complete the ID.me identity verification process for your My Social Security account today, or visit your local SSA office in person if you need assistance. If you delayed Medicare Part B enrollment due to employer coverage in the past 18 months, get the CMS L564 form completed by your former employer and submit it with your enrollment application before your special enrollment period closes. Visit every bank and credit union where you hold an account, update all of your contact information, and ask about adding a trusted contact designation. And take your last 2 federal tax returns to a qualified tax preparer and ask them specifically to review whether your Social Security income was reported and taxed correctly. Then act on what they find before any IRS or SSA notice arrives and starts a 30-day clock you were not prepared for. For things, all of them mandatory, all of them time-sensitive, all of them with consequences that compound the longer they go unaddressed. The seniors who handle these 4 things this June protect their benefits, their coverage, their accounts, and their tax standing going into the second half of 2026. The ones who do not will spend the second half of 2026 dealing with the consequences of not having done them in June when the window was open and the options were still available. Subscribe, share this with every senior you know, and I will see you in the next one.